Alright traders, today I want to talk about identifying the impulse leg. This is by far the most difficult thing that you're going to do in the Fibonacci analysis. Once the impulse leg is identified, it becomes very, very easy to identify where the pullbacks come in, where the potential pattern formations are set up. But in order to do any of that, you've got to first be able to identify the impulse leg. Now, there will be as many different traders as there are, will give you different examples of what they classify as an impulse leg. And many of them will tell you, well, you just see it. It's a short thumb high to a short thumb low, which is fine. But the problem is that you can identify any number of things as an impulse leg. Once the pattern is complete, for example, we're looking at the ABCD pattern here, and you can see the A, then the pullback, and then the C to D. And it's very, very, once we hit this point, once we get a break of structure to the upside, it's very, very easy to see, okay, impulse leg, retracement, and now the market's broken structure. So we are going to be looking at a potential ABCD completion around a 1414 extension. The problem comes in when you're trading Fibonacci failure patterns. And when you're trying to identify where the impulse leg is at before, as it's occurring, so that you know how to trade into the 382 retracement. And if we flip over here to the Euro-Yen 5-minute chart, and you see, how the market presses down, and we get a new structure low. Looking left, is this low lower than this low? Yes, it is. Market presses down, and then we get, this little consolidation area in here. And if we draw on our Fibonacci retracement, swing high to swing low, we can see that this pullback is very, very shallow. It's really almost more of a consolidation before the market breaks out to the downside. Now, in order to make it very, very easy for traders to identify and clearly state in their rules what an impulse leg is, I require two different criteria here. Number one, I require a break of previous structure high or low. So, looking left, do we have a lower low than this low? Yes, we do. The second criteria is that we must retrace at least into a 382 retracement to have an impulse leg. So, did the market from here retrace into the 382 retracement? It did not. So, if we had a break of structure, but we did not retrace at least into the 382, we do not have an impulse leg. What we have to do is go ahead and carry forward our Fibonacci until we find that area. Now in this case, market presses down, we pull back up into the 382 retracement, gives us a nice impulse leg here that we can readily identify. Now we have the ability to potentially trade the Fibonacci failure pattern. In this particular case, market came down, and we actually ended up getting short on the Fibonacci failure trade, and were quickly stopped out to the upside. Now, as we follow this market forward, though, we see the market put in a new high, because this high is actually higher than this high. But did we get a break of structure here? Not from impulse leg to impulse leg. So what we've got here is we don't really have this is not an impulse leg. It's not an impulse leg because we didn't break any structure. No structure was broken here. We didn't get a break above, close above, even this consolidation area here. Market pulls back and then rallies higher. So as we're watching this trade progress, and we're looking at our Fibonacci, what we're waiting for are gray candles. We want to see those gray candles come in so that we know where the market's looking to pull back. Now, If we look left, our previous Fibonacci retracement level, swing high to swing low here, we did get a break of structure to the upside. So now we have a clear impulse leg, a clear break of structure from here to here. Market starts to pull back here. We get a gray bar. Gives us an indication that things are starting to go neutral. Fibonacci retracement, swing low to swing high. We need to see the pullback into that 382. And of course, we just about get there. Depending if we adjusted our Fibonacci level, we'd see that we came right down into that 382 retracement. So now we have a clear impulse leg. And so it's very, very easy. For example, after the fact, after we see this consolidation and this rollover, it looks like, and I'm guessing here, Fibonacci extension, swing high to swing low, that we're going to come in about a 127 extension. Yeah, right in the 127 extension. So it's easy to look at that and say consolidation. Well, man, if I'd have just sold, the consolidation, we'd have rolled right over. It's easy to see that completion into a 127 extension. For a counter trend trader, they might be looking for a double bottom into here with some divergence to trade to the upside, to the long side. That's fine. It becomes easier to identify some of those. But if we're looking at this from a standpoint of how do I identify the impulse leg into a 382 retracement, it becomes much more difficult unless we have a clearly defined set of rules. And so in this case, we require two different things. Number one, a clear break of structure from the previous low or high. In this case, the last impulse leg before the retracement was here to here. So by those rules, in order to see a new impulse leg, we will have to break that structure to the upside. And then secondly, what we need to see is we need to see a pullback into at least a 382 retracement. Some people will look at this and say, well, look, this one went swing low to swing high. If I look at that, and it came back into a 382, I had a Fibonacci failure opportunity there. Well, not under the rules that we use for determining what an impulse leg is. We did not get a clear break of structure here. Therefore, this could not be the impulse leg. This cannot be an impulse leg. This is a retracement leg of the impulse. In order to get an impulse leg, we have to see a break of that structure. And this is how we walk the market forward. This is how we progress through the market. Once we get that break of structure, well, now we can see the pullback into the 382. We have a clear impulse leg here. With the 382, now we have the opportunity to potentially trade the Fibonacci failure. Or, if you're a counter trend trader, you'll have the ability to look for double tops that come in here. Again, divergence traders, this isn't such a big deal because when we pull up the divergence trade, it becomes much, much easier to see where the market comes in at. ABCD of an impulse leg here. ABCD of a new impulse leg into double, triple top highs. Pretty clear. I hope that helps everybody out a little bit as far as identifying the impulse leg. It's not an easy concept to understand. It can be frustrating and confusing at times, but if you apply a couple of very, very simple variables and rules or filters for classifying what an impulse leg is, you can more clearly define what it is that you're looking at.